What's up guys, Kieran O'Brien here, back at you with a brand new video, and today we're going to be talking about how to afford a supercar at a young age. Now, a young age is subjective, right? Young age for you could mean in your 30s, could mean in your 20s. Personally, I'm 21 years old and I just purchased my first supercar a couple months ago, all right? And today I'm gonna be talking about how to afford a supercar from a practical standpoint. Now, I'm gonna be kind of talking about three main topics inside of this video. Number one, my personal rules for what I think you need to achieve in order to justify purchasing a supercar. Number two, the actual math and credit and all that stuff that actually goes into purchasing one. And then number three, we're gonna be talking about insurance. Now, I'm 21 years old, but I actually do have friends. One of my good friends, Jeffrey, actually purchased his first Ferrari when he was, I think, 17 years old. And my other good friend, Hayden, purchased his Lamborghini when he was 18. So they have even crazier stories when it comes down to getting loans and finding insurance for these types of cars. Granted, they did both pay cash for theirs, so I don't think they had any problems with that. But that's neither here nor there. There's some pretty crazy stories out there. So again, young could mean in your 20s, it could mean in your 30s, whatever it means to you. I'm gonna be giving you guys some really useful information, and I hope you guys get some value from this video. Okay guys, so as I said, I'm a 21-year-old entrepreneur and I own a digital marketing business. That is my main business. That's what generates me most of my revenue and my income. And I want to make one thing very, very clear. The Audi R8 that I bought a few months ago, I did not use a single dollar from my marketing agency's revenues to purchase that car. Now, let me explain what I mean by that. I make money in other ways. I have an online training program. I have commission structures with certain things and affiliate deals. I make money doing trading stocks and all sorts of other things, right? And all of those things added up to enough money for me to purchase this car. Now, full transparency, I did not pay cash. I did not buy the Audi R8 outright. Now, the other three cars that I purchased this year, my daily driver Volkswagen, my Tesla Model 3, and my Mercedes AMG that I bought back in January, I did pay cash for those because I was just getting into them, driving them for a little bit. My daily driver was cheap. I actually ended up flipping the Mercedes, and then the Model 3, it was whatever. I didn't want more debt, so I just paid cash for it. Now, the reason that I'm telling you guys that is because in most situations, from a financial perspective, you should pay cash for your vehicles. With a supercar, obviously it's a much bigger sum of money, so in some cases it does make sense to finance, especially if you're gonna be able to utilize that money for other things. So I put $20,000 down on my Audi R8, again, all money that I made from other things besides my business, and then I financed the rest of it. Now, I will say, even the entire loan amount plus the $20,000 that I put down came from places that did not hurt my main business. So the point that I'm trying to make here is that if you're a business owner, if you're an entrepreneur, do not under any circumstances hurt your business in order to buy a supercar or any toy, a jet ski, I don't care what it is. Don't hurt your main business for you to look or feel cool. It's not worth it, trust me. Okay, so try to diversify your income, make money in other ways, create passive streams of income, buy some real estate first, whatever the advice is that you want to take, do something that generates you side additional income in addition to your main business before you go out and buy something like a supercar. This also means that you're using post-tax money to purchase these things as well. After you've paid taxes on your income, then you can go buy a car like this. Now, again, these are just my personal rules. I'm gonna get into my next one here in a second, and then I'm gonna go into the actual practical things, like down to the nitty-gritty how to actually do this. My next personal rule that I made for myself is that I will never buy a car unless I've made the entire purchase price of the vehicle in income in 1 month. And so, about 2 months after I made the purchase price of my Audi R8 in 1 month is when I ended up purchasing it, and that's when I was able to justify it for myself. Same thing goes for my BMW, my Mercedes, my Tesla, my Volkswagen, and the cars I owned before that. Every single car that I've owned, except for my very first one, I made the entire amount of the vehicle in 1 month. All right. And so that's another rule that I follow. Again, this is not advice for you necessarily. Everybody's situation is different, but especially if you're an entrepreneur, a sole proprietor, small business owner, try to follow that rule just as a general rule of thumb because it'll put you in a much better place financially. So with that being said, those are a couple of my personal rules, again, that you guys don't have to follow, just some general advice and some things that other people told me and that I followed and chose to do when purchasing my first supercar. Now let's get into the actual nitty-gritty advice, the real numbers of this stuff. Okay, so number one, if you're going to take a loan out to purchase your supercar, you're gonna wanna have a relatively high credit score, especially with high loan amounts like this. You know, we're talking multiple 5 figures, 6 figures, even 7 figures in some cases. If you're taking out loans of those size for an auto loan, not a mortgage or anything like that, obviously, but you're taking out an auto loan up into the 5 and high 6-figure mark, right? You need a high credit score with credit history, okay? You're gonna want a credit score probably upwards of 750 plus. My credit score personally, I actually just made a video on this a few weeks ago. My credit score is around 760, and I actually did get approved for the loan for the R8 because I had a relatively high credit score. Now, if you're financing your supercar, the next thing that you want to bear in mind is that the bank is going to look at comparable credit history when they're looking at your application for a loan, all right? And that means that they're going to look and see if you've had similar loans with similar loan balances in the past. So, lucky for me, I actually financed like 80% of my BMW M6 that I owned prior to the Audi R8, and I financed about 80% of that. And what's interesting is the amount that I financed on that car was not that much less than the amount that I financed on the R8 because I put $20,000 down on the R8. So the difference in the actual amount that I financed, the debt that I took on for each car, was only a few $1,000s. And so therefore, when I applied for the R8, after I had already paid off my BMW loan, when I applied for the R8, the bank saw that I made consistent payments for over a year on my M6. I never missed a payment. I paid the loan off in full when I sold the car, right? And so the bank obviously took that into consideration when approving me for the R8 loan because they saw that I had a very similar loan in the past for a car and that I paid it on time all the time. Now, the next piece of advice is you're gonna wanna make sure that you make at least two times the loan amount in one single year. Now, this actually was difficult for me because as a small business owner, as an entrepreneur, a lot of you guys can relate to this. I file my taxes as a Schedule C. That means that my business revenues are my personal income. Okay, and so you can see where that kind of gets tricky because on your tax returns, they show your net profit, right? My business's net profit at the end of the year is what my personal income is according to credit applications and things like that when I'm applying for loans. So what that means, unfortunately, is that I'm writing off anything and everything that I can, so I pay the least amount in taxes for my business, so I'm writing off all sorts of stuff, but then that means that my personal income reflects way less than what I actually made. And so for that reason, it was actually kind of hard to be able to prove the amount of money that I make to the banks when I was applying for these loans. I would have to provide bank statements and things like that as well. But the best way to go about it, if you can, is to have at least 2 times in reported income on your tax returns, 2 times the amount of the loan that you're trying to get for your supercar. Okay, and the next topic, the final topic, is insurance. How does a 21-year-old get insurance for a supercar and 2 other cars? And I'll tell you a little bit about how I did it. It's still pretty expensive. I still pay a decent amount per year for my insurance, but a couple things that you can do to bring your insurance rate down. Number 1, I own a Volkswagen Jetta that I paid $5,000 for. It's a beater car, super low power, not worth a lot of money, pretty safe car too. And I own that, and I actually have that as my primary vehicle on my insurance. So that, according to my insurance, that's the car that I drive every day, right? And it's the car that I drive the most frequently. And so that is one way that I'm able to save a lot of money on my insurance, because my other cars are, weekend cars, right? They're the cars that I only take out every now and then, because the Jetta is the one that I drive every day. And so my insurance likes to see that, because that means during business hours, right? Like 9 to 5, right? When people are commuting to and from work, that's when I would theoretically be out there on the streets driving around in my Jetta. And if someone crashes into me, it's not my expensive Audi R8 that they're crashing into, it's my Jetta that they're crashing into, therefore less risk for the insurance company. That's pretty much how that works, right? So that's number one. Put a cheap car as your daily primary driver on your insurance policy if you can. And then the next thing is low yearly miles. So I tell my insurance company that I'm putting less than 6,000 miles a year, sometimes even like 4,000 or 5,000 miles a year on my supercar and my other like fancy cars, all the expensive cars I've ever had. I've always told my insurance company that I'm putting like way less miles than my daily driver on those cars, because of course, like I just said, that means that the cars are on the road less, which means less risk for the insurance company, which means cheaper rates for me. So make sure that you do that when you get a supercar. Try to have another car that you can put as your primary car, and then also try to say that you're driving it only on weekends, only for pleasure use, etc., etc. It'll help bring your rates down. Now, the next thing is I have a high deductible. I actually have a $2,000 deductible on my insurance policy. And I do this for one reason. Obviously, I can afford the deductible, so that's one main thing. Make sure you're able to afford your deductible. If you can't, then you probably shouldn't be buying a supercar. So put a high deductible. It'll help bring your rates down. And of course, if you're a safe driver and if you're not doing anything crazy, then hopefully you never need to even pay that deductible, because hopefully you'll never be in an accident, right? So put a high deductible. And then one last thing, one little ninja trick that I like to do when I'm signing up a new car for car insurance is I like to remove any and all roadside assistance and all that, all those extra things, right? They actually save you a really good amount of money. So roadside assistance, towing, rental car too. A lot of insurance companies give you rental car coverage for if your car goes into the shop, they'll give you a rental car and they'll pay for it. I don't need a rental car. I have 3 cars. If one of my cars gets in an accident, I'll drive a different one, right? So I don't need a rental car. I cut that out of my insurance. I don't need the roadside assistance, because if I get stranded on the side of the road, hopefully one of my friends will go get a trailer from U-Haul and come get me, or I can just call a towing company and pay for it out of pocket if that does happen, right? So those are just some easy ways to cut back on expenses, especially if you're insuring an expensive car like a supercar. So guys, I hope that makes sense. I hope that I provided some value to you in this video. Remember, my rules at the beginning of the video are ones that you should follow, but you don't have to. The rest of them are very practical. I hope you got some value from this. My name is Kieran O'Brien again, and I make all sorts of videos on this YouTube channel about business, cars, and entrepreneurship. So be sure to browse, subscribe, like this video, and I'll see you guys in the next one. Peace.